All right. How's everybody doing? Good evening. How's everyone feeling after today's trading day? Hey, good evening, Dave. What's up, Clark? How you doing? Hey, Patrick, that sounds amazing. Lucky you. Fantastic. All right, so we got a few people here starting to show up. May as well kick things off, right? Don't think I got any emails for any questions. So I have a couple, a couple things here we should go over, I guess. I mean, wow, what a move, right? Recently here on NQ, what a rip on the news here this afternoon, right? Or on the ceasefire talks. Pretty nice, right? That's fantastic. So we'll see how that sets us up for tomorrow, but pretty good little foundation for us to get back into the upper part of that range, maybe break out. And back to business. We'll see if that's the case. It'd be fantastic to get a recovery move, right? Or something along those lines here. You kind of have a little bit of a trap set now for bears from that price actions perspective. It gives us an opportunity, right, to hopefully ride this up for the next little bit. So we'll see if we can find some of that intra, quote unquote, range trending price action. And if we can finally break out and sustain over those highs, starts to push us right towards a direction of, maybe getting out of a 6-month chop and into what would probably be a pretty violent market, right? The longer something consolidates, especially with big volatility, the bigger the payoff is going to be when the move does eventually happen. Now, the move could still be lower, right? The move still could be higher. We don't have confirmation of that yet. And so our objective here, right, is to effectively determine what are strong versions, right, of those moves. So kind of main topic, right, wanted to start the session off here today was kind of the difference between like an A plus setup or a B plus setup are kind of consistent setup triggers, right? So that those variables are, repeatable for everybody. And once we have some of those, kind of hopefully foundations in place, then we'll be, a little bit more quick, right, in our execution where, that sort of execution is the edge. That's sort of the next thing. And then we'll kind of fire through some pipeline stuff. So fundamentally, right, we trade like 4 different setups, right? Or 4 different versions of the opening range breakout. So we play the breakout higher, right? The breakout lower, and then we play the reversal from low to high, and then the reversal from high to low. Either one of those scenarios or either of those 4 scenarios, right, are something that we're always going to be happy to trade, always happy to manage. Doesn't really matter what the market is doing. And as long as our opportunities present to themselves, we should be in situations where we can get, repeatable outcomes and create that consistency in our process. This is where we need to filter out the difference between like an A plus setup, a B plus setup, a C plus setup. And for me, that fundamentally comes down to the confirmation process of our setup trigger. So my setup trigger occurs, right, when we have a breakout from the opening range, right, or when we have a failed breakout and then reversal. Those are my 2 setup triggers, right? Um, that they're the same if you're high or low, if you're bullish or bearish. So we're just basically mirroring the similar patterns. What we want to focus on then, right, is that moment of confirmation. So if the setup is when price, pierces through a low or pierces through a high or, fails to make a move and then reverses, that's something that occurs in between candle closes, right? Candles effectively become like goalposts that we can judge price action in. And so what happens between those goalposts is what we're trying to evaluate consistently. And we want to filter out, right, those weak opportunities. So if setups occur in between the goalposts, we want confirmation to happen once those goalposts are basically locked in, right? So what I mean by that is the goalpost is the difference between the open price and the close price. And then everything that happens outside of those ranges is kind of like the supplementary context that we use to define or structure our strength. So confirmation then becomes how consistent those goalposts become, right? The wider, the stronger, the more deliberate, or however you want to describe it, the more effective, right, that signal is going to be. So if we can see strength from start to finish, we can see one side in control the entire time. Well, that's how we're going to know that we're looking at strong price action. Now, seeing just a strong candle shape is fantastic, but markets fundamentally rely on volume, right? So you need more buyers than sellers for a move to happen, and you need more sellers than buyers for a breakdown to happen. This is where we use volume. If our candle is strong and it's indicating our narrative, the difference then, right, is if we have a strong candle shape, we would expect a strong volume profile to match that, right? If we're seeing strong bulls or strong bears, we should see lots of them. And that's where the increasing outlier standard comes from, and how we use it to judge strength. So then the variance, right, of like A plus versus B plus versus C plus comes down to the combination of the candle shape and the volume profile. So something that would be A plus, right, would look more like this 11-14 candle, whereas something that's more C plus would look like that 10-10 candle. And so finding that filter in between is generally what we want to kind of maximize and hopefully find our structure within. So the difference between an A plus setup and a B plus setup isn't necessarily the size of the move or the size of the candle. It's how strong those goalposts are, how convincing the volume profile is, and how consistent the narrative is across all the call it trigger points, right? Or points of data that you get when a trade is happening or in between those goalposts kind of closing. And that's our objective, is to find that strength, find that context. And when we can then execute with conviction. And if no, then we can wait it out, be chill, and hopefully avoid some obvious mistakes. Does that make sense? Any questions? What do you guys got for me here? So if I were to ask you to repeat it back, what's the difference between an A plus setup and like a C plus setup? Yeah, spot on, right? So candle shape and volume profile. And then what's the difference between setup and confirmation? So when does a setup occur and when does confirmation occur? Maybe that's the better way of phrasing it. So the simplest way to phrase it, and most of you guys have it right here, right? Setup is a like level piercing, price action event happening, right? Something along those lines. Confirmation is when that event holds, right, above that price line or at that price line with a strong candle shape and increasing volume. So confirmation occurs at the candle close. The setup trigger can happen anytime in between the open of the candle and the close of the candle. Make sense, right? So like a setup here would be active. Let's say my target, let's go live markets, probably going to be a little bit rowdy still maybe. Let's say my setup here, right, is a breakout through 83, right? We made a pierce. The second it makes that lower low to 82.75, I have a setup trigger and I'm looking for confirmation. So then, right, I would look at this candle. Is it giving me a strong volume profile? Is it giving me a strong candle shape? If the answer is yes, fantastic. Let me execute it, right? Or work backwards to try to find my entry. If the answer is no, sweet. Don't need to make a decision here, right? I can focus on, really managing my expectations, and it kind of makes it a binary event, right? Because volume either is going to be bigger than everything we've seen, right? Or bigger than what we've seen recently, or it's not. And the candle shape is either going to be strong or it's not. And if we can remove like the emotional weight of making a decision there and basically just make that process muscle memory, you just like won't even think about it, right? You'll just see it, you'll just do it. It won't create any like mental strain. So it's the repetition of that same process. It's the mirroring, right, of our setups to the either upside or to the downside, and just the repetition of those techniques. We get that process really consistent, then everything else has the opportunity, right, to kind of slow down in your brain, because you're not thinking, okay, what does price have to do? How do I have to behave? Yada, yada, yada. It can be, okay, here's my entry, right? Or here's what I need to do to find my perfect entry price. Here's how I need to manage risk. Okay, yesterday I knew, or I had a day where maybe I held a winning trade for too long. So now I'm putting my focus in making sure that I'm managing my winning positions well. And you can start to compound, right, lessons or skills that you've taught yourself or that you're like kind of working on, right? And so the faster we can create that muscle memory with the repetition of that system, generally the better our trading is going to go, because we can start to focus on the things that matter. The setup trigger in itself, the point of it, right, is for us to get like something that happens consistently with similar variables. So if my setup is always a breakout through, the opening range, or it's a reversal after a failed breakout, or it's a breakout through high of day, that's something that I can easily track, test, study, and learn from. So if my opening range breakouts, they maybe have the same win rate as they do historically, but then the average win rate starts becoming 3 points and my average loss starts becoming 5 points. Well, now I know I have a problem, and I know that, okay, relative to what I've been doing here before, this is significantly below like baseline expectations. And I need to either figure out, is it my execution, right, that's costing me my money? Is it just the market and bad variance? Or has the strategy degraded where it's no longer useful, or market conditions have changed? And so the more consistent the variables we have around those processes, easier it is to figure out what like little tweak we need to make, or what the evolution has to look like to take that next step in our strategy development. So that's the end game here, right? The more that we can, yeah, systemize the boring fundamentals and kind of react off of muscle memory, um, then the more we can focus on the quality of our execution, which is ultimately where you make your money. So, at what point does the candle start to get wider from volume? Once the volume surpasses a certain point, um, with volume candles, I probably wouldn't put too much stock into it. Like normal candlesticks will all look the same, right? So, volume candles, I think all it really shows you, right, is just relative to previous price action, is this outlier volume or not, right? Like, is this something I need to pay attention to? That's really all it is, in my opinion. The reason why I use them is I think it just helps break up the chart for me a little bit, and visually I like that. Like it um, feels less monotone, maybe. So I purely use volume candles for like aesthetic purposes. I don't really care or yeah worry about at what point do they start to get big. It's kind of a coincider, right, with once volume is outlier. So why do we box in the trade with the Fibonacci? Can't we just consider a 10-point risk from the candle extremities and place the trade? Yes, absolutely. That would be my expectation of what you're doing. I use the Fibonacci tool because it allows me to very easily map out my trade for you guys with one click, right? So instead of having to draw three lines, edit three lines, delete three lines, I just have a simple drag and drop, and then that spits out a specific number for me. So shows everyone what my stop loss price is going to be, shows everyone what my exit target is going to be. And then from there, I draw in my blue line and map out my fibs so that, yeah, like I know where my entry target is. So this, like, I don't use this for any technical analysis, right? I mean, risk reward justification, sure, but like you said, we're risking 10 points, so it's like pretty easy to get 30 points. But it's more, yeah, it's to make my life easier when I'm drawing things out. So it's not for many, I don't use it for any technical reason. I use it because it saves me a lot of time, hassle, and creates both a visual that you guys can follow, right? And spits out a number. So if I forget to say something or whatever, there's a visual fail safe for you guys to all have a reference towards. Any other questions here, guys, before we kind of move on to the next topic? Want to go final call for the confirmation setup section for questions. We'll move on to execution stuff. All right, sweet. So execution, right? I think this is the thing most people probably get hung up on, right? People are either too gung-ho or they get too nervous and basically miss every trade. The whole point, and again, we talked about things mirroring, right? Where we're trying to repeat, the confirmation and setup techniques, right? They're the same, just different colors on the bullish side or the bearish side. We kind of want to repeat a lot of the skills we have or like similar concepts we have when it comes to our execution. So the reason we use that A+ confirmation standard, right? That outlier standard, that strong candle shape is because it gives us a like binary event, right? It's either a yes, no. We want to get to a point with our trading as a foundation where we're creating yes, no decisions. Now, this is not something that you will continue to do for the entirety of your execution. But what you need to effectively create is a scenario where you're training your gut, training yourself to trust your system, and you're creating a binary entry event. This process only will work if you're actually studying the quality of your entries post binary event, right? So, if you were to then go back after the trading day and you were to look at your entry and you're asking yourself, okay, was my entry perfect? Was my entry bad? Or was my entry, like just somewhere in the middle? You'll start to train that gut to know what bad entries feel like so you can stop missing or start, missing, right? The trades they're getting stopped out on. So avoid the obvious mistakes. And then B, you're going to have a lot more confidence clicking submit once price action actually is in your zone and you feel that moment of calm. That moment of calm, right, is something that I've talked about a lot in the past. Sure, I've talked about it in some of the previous kind of coaching calls that we've done. But what that does, right, or the whole objective of that is that I trust my system, I have confidence in my execution, and I'm entering a position from a moment of confidence, right? Not arrogance, not emotion, not greed, but confidence in my system, confidence in my rules, confidence in my process. That confidence is unfortunately not something that you can buy, right? It's something that you have to earn in the market. And the way that you speed up that process of earning it is, judging the criteria. So in our execution, right? We're setting ourselves 10-point entry targets or 10-point targets on NQ. Already, fundamentally, right, that is an extremely tight stop loss, right? If we're looking at this trade, we're to set up, right, we're theoretically risking this much to make this much. It's a preposterous risk-reward ratio. You need this trade to work out like once, right? Once in 50 times for you to be profitable, right? So, and easily happens. So the math or the actual trade itself is not what's scary to people when they're entering positions. What they're scared about is either losing money or being wrong, right? They don't want to be wrong or they don't want to lose money. So the only way that you can get over that fear is to create the confidence in your technique so that you can basically outwork the doubt. We keep kind of going back to the same thing here, right? if my objective is to improve the quality of my executions, the first thing I have to focus on is getting that entry process to be binary so that I can start to study those events. So again, right, we're going to map out this trade. Actually, we probably should find one that actually has outlier volume. Right, so if we were to map out this trade, it would look like something like this, right? Your initial binary entry target is the second it hits 10 points, or the second it hits 8 points, or the second it hits 5 points away. You can set that up as a limit order too, right? Where if your objective is, okay, every time my trade is within 5 points of the stop loss, I'm clicking submit, and that becomes like your binary entry trigger. You can let orders hang and chill in that spot and see if they happen. The second, right? The second you get executed on or your trade fills, you're taking out your pen and paper, you're taking out your notepad, you're taking out your cell phone, and you're starting to track how you immediately feel in that moment. So it's like, okay, entered in at five points within my stop, didn't feel nervous or felt nervous, or I was worried I wasn't going to get filled, or whatever the intrusive thought is in your brain in that moment, write it down. The next point of reference, I guess, right, for yourself is how long in drawdown did you spend? So did you spend a long time, or did you get a quick resolution, right? So long time, bad entry, quick resolution. Yeah, good entry, right? Even if it's a loss. And then the final element here, right, is post-market, what would have been the best possible entry, right? So now you have an understanding of a binary event. You're tracking your emotional triggers as you pull into that binary event, and then you're tracking your immediate emotional reaction once you are in your position. Those then become your data points, right, to create that moment of clarity. So if you're constantly finding yourself right in that 5-point range and things just aren't happening the way that you want, and now you switch to 6 or 7 or 10 or whatever, and you just restart that process. But you have to earn that confidence, right? And trade execution, or that moment, is one that we have to all decide for ourselves. And that's the process, right, I would take to build as much confidence as I could in my entry criteria, create binary events so that I can learn, study, and track from them, and then notice the emotional patterns so that I can figure out what's causing them, so I can create that moment of calm and remove the binary execution. You guys see the transition path there, right? It's make it easy for yourself to collect data, right? Both on the market and yourself. Create experiments on how to create better outcomes with binary events. Track the emotional reactions. As you track the emotional reactions and become more aware of them, you're going to find those patterns that make you feel relaxed and confident and in control, basically, when you're clicking that button. And then you're going to find yourself being able to talk yourself out of those obvious mistakes that trigger those negative emotions that you became aware of, and enter positions where you don't get those like warning signs or sirens, or however you want to describe them, that trick you into making decisions that you don't want to take. You guys get what I mean by how you improve your execution process? That's step one. We'll get to the PTSD thing in a second. But does everyone understand what that process looks like, right? And that doesn't need to be like a 6-month thing, right? Like that's a project for a week, 10 days, like 10 trading days. Guarantee you do that, like you'll be so much more confident, right? You track 100 of your trades, become aware of 100 of your triggers, you will feel really good about your entries. What's the routine, guys? If I were to ask you to repeat it back, what's the routine? Right? Create a binary system, make it easy for yourself to get executions. So if it's a binary system, right, you need to be getting filled on those trades. You can't try to outsmart yourself from doing it, right? You have no evidence that you can outsmart your entries yet. You need to create it first, right? That's what we're trying to get to. So it's a yes, no. And if it's a yes, you have to get filled, right? If it's a yes and you don't get filled, that is not doing that process, right? If it's a no and you get filled, that's also not doing that process. So if your goal is to get stops at 5 points or entries within 5 points of the stop loss, pretty hard, right? Or you can't punish yourself and chase a trade and break a rule if it only pulls into 8 points, right? Or 6 points or 5.25 points. And then from there, right, we track that data, we study those trades. Okay, was my entry good, bad, somewhere in the middle? On those bad entries, okay, what did I feel like, right? What was the emotional state? What was the emotional trigger? On those good entries, what was that emotional trigger? How did I feel like? What's the difference? And now you're starting to create a fact-based system for your gut to rely on, right? And once we're there, yeah, then we'll stop missing trades that we don't want to miss. We'll stop taking trades that we don't want to take. But it's understanding that the only way that you get there, honestly, taking a bunch of losing trades before you get the data to where you need to be. And I say that from a negative context first, because you will have wins in there. You'll have plenty of wins in there. But it's getting comfortable and confident with those losses, right? Getting comfortable and confident losing and losing small and in control that will help you identify that moment of calm. That's the objective, right? That's the number one game. Because if I lose that feeling of being in control, if I start to get tilted, I start to get fearful, I start to allow my emotions to dictate my trading decisions, and almost guarantee that I will not be very successful, that I won't make as much money as I possibly can from that setup. And I'm confident, or I'm sure that I'll leave a ton of money on the table. So focus, right? Variables first, money second, and study, track, improve, test, repeat. Right? It's that constant process, day after day, trade after trade. Okay. We had a question about I get PTSD from taking multiple stops in a row. I'm trying to find a way to work through that right now because I end up closing winning trades early so I don't risk another loss. Two questions there as follow-up. Do you have, or maybe three, what's multiple? So multiple stops in a row, is that 2 stops in a row? Is that 3 stops in a row? Is that 4 stops in a row? What's that number? So how many trades is it? What's your risk per trade? That'd be question number 2. And then on winning trades that you don't have like stops or like a history of getting stopped out before, what do you do differently versus what you do when you've had that baggage? Last question's a bit of a mouthful, sorry. And this is a good exercise for everyone to go through, just mentally in your head. So you want to do it differently than that, right? So if I were to go into deep charts here, so you set your order, right? And you type in your price, not the number of ticks, right? So you set your limit price to be, let's say 25,100, right? And then you set your stop loss here to be 25,090, right? That's all you would do. Let's see. Seem to be changing. See if it goes positive. Yeah, stop isn't changing. So maybe what you have here, right, is you have your trailing set up. So this would be following maybe by ticks. But I don't see that behavior that you're describing repeating in the price action. I see. So if you're saying if you put in 100 as your fill price and then you click submit at, let's say 98, it pushes the stop to 88. Is that what you're saying? So the move then, right, would be don't set your stop loss, set it as an independent order, right? So you fire off your execution, cancel, set your stop loss at 090. And then that shouldn't change, right? So that should work fine. Yeah, I mean that would be the alternative here, right? So like you're in a position and you bought a discount and your stop got changed, right? So let's say lost $20, damn it. Just kidding. Let's say you got filled, right? You'd still set your stop loss here. And then once your trade gets executed and you notice that your stop loss get pushed, you just set a stop order execute it, cancel your current stop order, and you've got that fill after. You can just drag the line after too. That's fine. That's probably a pretty easy outcome. So then you just drag it up to where you want, added the extra 2 points. That's fine. What I would maybe also challenge you to do, and this is a good skill, it's a good thing to practice. If you're setting yourself that 10-point stop loss, right, and it triggers through, 3 points above where your stop loss price, where you wanted it to be, try to mentally close it. So if you have paralysis once you're in a position, right, that's a different issue. I would indicate that that's probably a position sizing thing, right? Where now like the thrill of the number or like the dollar amount of risk that you have is preventing you from being deliberate in that decision. Right? Like if you're saying that you feel like a little bit paralyzed once you're in a trade, that's not a very positive adjective, right? If we're saying that we want to be in control, that would indicate the opposite of that. Try one contract, right? For like a week. See if it changes how you feel on those entries. See if it changes how you feel on those trades that you had those 3 or 4 losses in a row on. Because if you start to hold those winners for longer, right, you're going to make more money than what you're doing right now with 2 contracts, right? And if your stop loss remains as 10 points, that's not a problem either, right? Like when you're entering your trade and you're setting up your risk, you're setting it up with the expectation that, or you're starting at that conversation with yourself with, I'm happy to lose this number, right? So if all of a sudden now losing that $400 or however much it is that like stings, again, I think that's probably a symptom of saying that, hey, I'm maybe not happy to accept this number as much as I'm telling myself I am. Anyone else got any questions about like the execution stuff? Questions about this? Yeah, so you're saying easy loss to swallow is a 1 contract 10-point loss, right? So when you take 10 points at 2 contracts, I don't think you're happy with that number. All right, but you're happy with 200. So I would set it up so that 200 is a worst case scenario. And then, yeah, if you get a discount or whatever, you build it out from there and you basically earn your right to trade bigger sizing. Look, you'll hear this from a lot of traders, a lot of people. I think even in this group, a lot of people had huge breakthroughs in their trading because they unburdened their psychology by sizing down their trades, right? And I think everyone has a little bit of an ego where they think, oh, I can, trade bigger sizing, or I can do this, or I deserve to make this. It's hard to find that moment of calm if your foundation is a place of ego, right? And if, yeah, we're leaving a lot of money on the table, we're not executing our technique correctly, then it doesn't matter how much you're trading with. You won't really keep any of that cash. We're traders. Therapists can't help what we have. All right, what other questions we got here about execution before we kind of talk about pipeline and stuff like that? Like what I will say, guys, right? Yeah, like I think trading, it's extremely fair, and to a certain extent it gives us what we think we deserve, right? Like subconsciously or not. And I think a lot of the time are, yeah, a lot of the time negative psychology stems from like a yeah, I've described it as like a self-love issue. So like I want to follow my rules and my strategy and my setups because that's like a version of showing respect to myself. And I think when I'm even subconsciously maybe taking that lightly, or I'm not like really serious about it, then that's where my psychology or people's trading psychology starts to really impact them, because the market starts to give you feedback that subconsciously reinforces whatever that intrusive feeling or thought or like mindset is. I think one of the very confusing, confusing things about trading, that you don't have to be a good person to be a good trader. You have to just have enough self-belief in yourself that you are a good trader, right? So like you could be a murderer and a thief and a war criminal and whatever, and you could be the best trader in the world because probably at some point you think, yeah, actually I'm not doing anything wrong, right? And so I think just, and I'm not saying this about anyone specifically here, right? So please don't interpret it that way. But the way that we worked with psychologists or trading psychologists institutionally was in that context, right? So it was about basically creating a belief that we deserve the work that we're creating for ourselves and a self-belief system to basically go out and take it. I think that's got to be the starting point of all trading psychology, right? Where when we attack problems of like, I'm going to fix it or I'm going to die, that's, I think, how you get better, right? Like a big, yeah, like a big turning point in my trading was when I decided that there was no alternative besides being successful, and then found ways to make my actions match my words, right? And that's not something that I think ever stops, but I think just embracing that mindset as a like, I'll effectively do whatever it takes or I'll die trying. Then it's like, oh, I'm just being a stubborn bitch who likes to overtrade after a loss. Like that's not a big deal, right? Like I just had a life or death decision I made, and now this is my problem. Like this is easy, right? So it's almost like you choose to accept the struggle, and then you belittle your problems to make them feel insignificant so that it doesn't feel like it's a part of the struggle. You get what I mean there? So it's like you give yourself this challenge of solving this really challenging game, which trading fundamentally is. And then when you solve problems in your own trading, you give yourself credit that they weren't actually that difficult, right? The whole objective of that compounding self-belief system is that eventually you realize that following your rules, being consistent, sticking to your process is actually technically quite easy. And yeah, we've reinforced that with years or months or however long of being like, oh yeah, I fixed this problem. That was no big deal. Right. So it's like we give ourselves a big challenge and an all or nothing that we're going to accomplish it. And then as we take steps, it's like, oh yeah, that was easy. Right. And then you just fly through whatever limiting beliefs, right, you had. Because I think for 99% of traders, it's a game between the ears, not a game on the screens, right? And yeah, I think psychology is fully dependent on how we view ourselves and like what validation we want from trading. And so if we can choose to reframe that in the right way, it gets exciting to solve problems and it becomes really fun and it becomes a really addictive loop because as you start to become more critical of yourself, you start to make more money, you start to get more freedom, you get to start to say no to more things. And that's an extremely rewarding place to be, right? Any questions on that? Well, like I've said it before, trading is really difficult because if you want to be a profitable trader, you can lie to everyone else but yourself, right? And so if I'm gonna like, yeah, actually improve and get better, I can't pretend that I'm not doing certain things, right? I can't there is no glory in bullshitting yourself. There's comfort, but there's no glory in it. And trading, yeah, really exploits that feeling. Right? Our P&L makes us feel every insecurity we have. So if then we're trying to use the market to get some sort of form of validation, that's what creates the bad psychology, right? All right. So last thing here for this evening, just kind of like development pipeline. I know people probably have a lot of questions about their DTR or their day trader funding accounts and things along those lines, right? Yeah, everything's a binary, right? Everything's a binary. Like it all, yeah. Either go for it or you don't, right? But yeah, I'm sure people have questions about their accounts, how things are going with the company, yeah, what's coming down the pipeline, what's setting up, right? Whatever it might be. So yeah, try to give you guys a quick rundown of how I've been using or spending my time here recently. So prop is definitely coming along pretty well. We're starting to fix a lot of the persistent bugs that people have maybe been dealing with. We've cleaned up a lot of stuff that was creating issues and problems. A lot of like the hopefully grunt work of that is now sort of behind us. Should mean pretty smooth processes in the next sort of next couple days. So I'm really excited for that. Once everything is sort of stable there and working as it should be at all times, this is where we're going to start to integrate it into the DTR platform. So we'll make sure that there's a basically link button. You click it once, it syncs up your account to the website, and that just auto pulls your trades. I do have that feature all built out and ready to go. I just don't want to turn it on if I have any corrupted data, right? So if that ends up happening, I'm just going to have a fucking nightmare trying to fix it all. Sorry to curse. And I don't want to deal with that. So I need to make sure that one source of truth is absolutely perfect before I introduce it, right, to another source of truth. And so that's really what the challenge is here. So we'll get that all set up so that everyone's trades are automatically sent over and everything is easy peasy, lemon squeezy. Same thing there for the dashboard stats, things along those lines, right? So all those fixes are coming, hopefully within the next 10 days or so. And I'm confident then that once that is, we'll roll out the TradeC platform. So for those of you who want to use TradingView and use that integration, you'll have that up and running for hopefully May 1st. So that's sort of what my general timeline is. Yeah, exactly. To be able to do it as you were used to. So yeah, hopefully by the next next month or so, everything should be going smoothly there, and we're in a great spot. Questions? I know people send out some feature requests and things like that. Anything that comes to mind that you guys want to mention about your experience with the prop so far? Anything like that? Safe space. Yeah. So the reset bug we're trying to fix. So TradeC uses Rhythmic. It uses Rhythmic. The reset issue hopefully will be resolved. It's basically just an account provisioning bug That should hopefully be resolved. We have a patch fix. We just haven't pushed it live yet. So send me an email. We'll make sure I take care of it here this evening. I guess we talked about a lot of stuff here. A little bit maybe more structured than previous coaching calls. So guys, like I can't provide any support for third-party trade copiers, like any third-party tools. It's just impossible, right? I think the web version's just fine. I've had no issues with the web version. So, Mandy, describe the issues. What do you mean by that? So, Bart, like the reason I can't provide third parties because I'm like, I'll end up bashing my head up against the wall in the same way you can, right? They don't give us any special privileges. I have no like points of contact or any connections. If you need any help specifically, Volumetrica is probably the people that could reach out, or trade see like the actual copier. But you know the goal here. I mean, and I get everyone wants to trade their other prop accounts too. Like my long term objective is it for all to just be internal. Yeah, it'll just, I mean, you'll have to purchase new accounts. We won't be able to transfer over accounts because it's a different data source. Yeah, we'll make sure that everyone has access to the Trading View platform if that's what they want access to. It's coming. We had a couple payouts here today. It was pretty awesome. So the revenge trade, I'd be careful, right? Judging yourself. We talked about this a little bit in last week's call. The feedback on the website for the revenge trading can be a little bit confusing because by default the website like can't tell you know what your heart rate was or you know what that decision actually was fueled by. It can only judge based on how like taking a loss that was bigger than average or bigger than your mean and then having a trade within like 5 minutes of that time period. That's kind of what it's classifying as a revenge trade. A revenge trade isn't that by default, right? A revenge trade isn't necessarily a time based trigger. It's do I take a trade where the next one I don't have control over my actions, right? If I'm in a position and I've lost control over why I'm in that position, that's a revenge trade. So it's not a time thing. It's when I enter my next following trade, did I follow my rules or not? If the answer is I didn't follow my rules, then it's a revenge trade. Doesn't matter if it's 5 seconds after or 5 hours after. And the same thing is if, okay, I took a stop loss, I get stopped out, then I enter a trade 5 seconds later. If on that trade, I executed my rules perfectly, I didn't break anything, it was still objectively an A+ setup, sweet. Then that's not a revenge trade, right? So a revenge trade is when you make a decision to make back P&L, not to execute your thesis again. We'll get back to the one-on-ones here soon, guys. Yeah, you know, things are clearing up a little bit here, but it's been a very hectic couple weeks. But we'll get back to those here soon. All right, I'm going to go final call for questions here on the evening. Final call for questions. Size down, right? Size down. Like the dopamine of getting funded is cool, but it kind of sounds like you're rushing to maybe get to that first payout right away. Learn how to survive in your funded account before you try to push it really aggressively to the live, right? Or like towards your payout. Like you got to tread water before you can swim. So size down. Think about maybe limiting the number of trades you take per day. Journal them and see what happens in a week. I bet you there's a lot less revenge trading. All right, one last call here. One last call. All right, everybody. Well, no further questions. Then we'll kill the coaching here for the day. Have yourselves a fantastic, I'm going to say weekend, but that's not the case. Have yourselves a fantastic evening. We'll see you guys tomorrow. See what the market has in store for us then. And hopefully we can get some joy after today's nice trading day. So have yourselves a great one, team. We'll talk soon.